Okay, in this video, I'm going to be going over how to find your daily bias. I believe this is a very big problem in the trading community, or it's a question that gets asked quite a bit. It's a lot of confusion on this topic. So in this video, I'm going to give you one way of doing so. Now, there's so many different ways to approach the market. There's different ways to find that daily bias, but I'm just going to focus on one in this video, and it's going to be the easiest one. Okay, I believe by the end of this video, I think all of you, if you stick around that long, I know most people don't got the attention spans for it, but if you're able to stick around to the end of the video, I think this is going to clear up everything for you. And this is probably going to be the only video you ever need on daily bias. It's just a really simple, easy way to go about doing it. Okay? The easiest in my opinion. All right. So let's get started. I'm going to go over USD JPY first. So this is something that I called out the other day in my free Discord chat, link in the video description. Let's take a quick look at what I posted. So this is a chart of USD JPY. See how I kind of drew that little blue line to the downside, indicating that I think we're going to take out that sell side liquidity with those sell stops beneath that level where that orange line is. That's kind of what I'm indicating with this. So my daily bias on Friday, so yesterday, was bearish. I came into the market with a daily bias bearish. So how did I come up with that conclusion? How did I come up with that daily bias? What on the daily chart showed me that? Let's go into it. So step number one, you need to see a shift in market structure, okay? Because it's going to boil all down the market structure. That's why I've said so many times, market structure, a firm understanding of market structure is so important. And I'm going to leave a few links in the video description to my videos and my blog post on market structure as well, that I want you to read and watch after you finish this video, okay? Because market structure is what it really comes down to here. So right here, we broke that swing low level. That's a shift in market structure. What is a swing low level? A swing low level is when you have your lowest candle in the middle with two higher lows on the left and the right. So there's your lowest low, if you look at my cursor, and then you have on the left a higher low, and then on the right a higher low. You're taking the absolute low of the candle, okay? Not the closes, the absolute low that was traded during that period, which is during the day. We're using daily candles here, finding the daily bias. So we had a swing low put in. What happened here? We had price, boom, came down lower, huge flush, huge move lower, broke that level. That is our shift in market structure, but it's still early. It's still early to get that daily bias. We need a couple more things to take place. That's step number one. That's step number one, what you want to see, but there's a couple more things you want to see. After you get that shift in structure, remember, we're talking about a bearish example here. So we're finding a bearish daily bias. After you get that shift in structure to the downside, you want to see a swing high put in. That's step number two. Right here, it happens. Right here. Highest high in the middle, two lower highs on the left and the right. Now, I didn't wait for step three. So step three isn't 100% necessary, but if you want to play it really safe, if you want to wait for 100% confirmation on it, step number three is to wait for that third candle low of the price swing to get rated. So you want to see the sell stops, because remember, underneath flow of day, what is resting? Sell side liquidity. You want to see that sell side liquidity purge, take that in the marketplace. Okay, at that point, you have 100% confirmation that the market structure is shifted to the downside, and you can come into the market every day having that daily bias bearish. Your daily bias is bearish. So that's how I came up, and that's how I found my daily bias on this that I posted in chat the other day. Again, one last time, shift in structure, swing high put in. That is that confirmation. Shift in structure and then a swing high put in. So market structure is confirmed bearish. That's why I came into the market with a bearish bias. Now, when does that change? So when does it make that switch where we need to hold off, we need to sit on the sidelines, we need to possibly reconsider our bias? When does that happen? Well, it happens once you have a swing high taken out. So in this case, we had our swing high right here. So say this didn't happen. Pretend for a second that this large down move right here didn't happen. And say it rallied up really hard and boom, it broke that swing high right there. That would mean what? That would mean I was wrong on the direction, which is absolutely okay. That's going to happen. You're going to get it wrong sometimes. Accept it. That's trading. So say that did happen. Say I didn't get it right. It broke that swing high. That's where you would hold off, okay? And at that point, after you broke that swing high, you would need to see price do the same exact signatures that I just mentioned a second ago. It'd have to basically just start over. It'd have to start over, and you would have to see the exact same signatures. So again, you'd want to see it come lower, and you would want to see it take out a swing low, and then after it takes out this swing low, you want to see it put in a swing high level. So the exact same steps that I just laid out for you a second ago, you want to see happen again, okay? If it that's if it took out that swing high level right there, okay? Now the second thing that occurs that would make you want to sit on the sidelines and hold off, again, remember we're talking about having in this case, in this example, a bearish daily bias, is if you had a daily bullish swing low put in, okay? So remember, what is a swing low level? It's simply when you have your lowest low in the middle, two higher lows on the left and the right. So if you look at my cursor, just imagine with me for a second that this is that third candle. What happens? See how it closed higher than that middle candle, right, like that? So if that was to happen, you would want to sit on the sidelines, okay? Now, true, the market structure is still 100% confirmed bearish, okay? That hasn't changed, and that doesn't change until it breaks a previous high, like we just mentioned a second ago, right? But when you get that swing low put in, you still want to sit on the sidelines, play it safe, because it does have a little bit of upwards momentum going towards it at the moment, and we want to put all the probabilities in our favor that we can, okay? So after you get that swing low level put in like that, what you want to see next is, before you assume with having your daily bias as bearish, you want to see it come back down and break that swing low level, right? So you want to see it like right here, because remember, this is that, just imagine for a second, that's that third candle that closed higher. What you want to see next, you want to sit on the sidelines for now after that closed, and you want to see it come lower and boom, break that swing low level, okay? And then at that point, you could continue with your daily bias as bearish. Now, you don't need all the steps to happen again with that second example, okay? So if it doesn't, if you just have a swing low level put in and it doesn't break that swing high like that, then you don't gotta wait for like a new swing high to put in and all that type of stuff. You can continue with having your daily bias as bearish. You only repeat the steps whenever you have a swing high like this broken to the upside. If that was to happen, then you would have to see a swing low broken, and then you'd have to see a new swing high put in. And that's how you would go about it, okay? So we're gonna go over another example here. We're gonna go over a few examples in this video because I wanna make sure I really drive this home. So let's pull up. So now we got a chart of Euro USD. So you can see this thing's been kind of consistently grinding up here for a while now. So we can see Euro USD was getting beat up for quite. And then what happened right here? What was formed? We had a new swing high level put in. So if you look at my cursor, because now we're gonna go over a bullish example of how you would have a bullish daily bias, which is basically, it's the same thing, you just switch it around. But you had a daily swing high level put in right here. So I'm gonna mark it up for you real quickly, 1 second, and boom, right there. So you see that? So you get the daily swing high level put in. What you wanna see next is you wanna see that swing high level get broken. Why? Because it's a shift in market structure. Whenever that swing high gets broken, that's your shift in market structure. And then after, because it's not 100% complete yet, market structure is not 100% confirmed to the upside yet, you got to let something else occur. You need to see that swing low level put in. So after you get that shift in market structure, you want to see a swing low level put in. Okay, so what happens after it has that shift in structure, trades up into a premium, it does what? It pulls back into a discount marketplace, and then after it pulls back into a discount marketplace, what does it do? It puts in a swing low level after pulling back into a discount, right? Okay, so at that point, we could have a daily bias of bullish after that swing low is 100% confirmed. And again, if you want to be 100% safe, wait for 100% confirmation, wait for the buy stops above the third candle to get rated before you look for it. So you could be aggressive, which I do many times. I'll just wait for the swing low to put in after the shift in structure, or the swing high to put in after the shift in structure. I'm a little bit more aggressive, but if you want to be 100% safe, you could wait for the third candle high to get rated. After that occurs, you come into the market every day having a daily bias of bullish, okay? And that bias remains bullish until you have a swing low level broken to the downside, because that would be a shift in structure, right? Or the second scenario, you have a swing high formed, which we had happen basically pretty soon after that was taken out. So you see right here, highest high in the middle, two lower highs on the left and the right. That's a swing high. So as soon as that happened, it would be smart to sit on your hands, be in cash, let it play out. Now, market structure, even though you got a swing high form, this is very important. Market structure is still bullish, okay? It's confirmed 100% bullish, but kind of think of it like you have daily momentum to the downside and we're bullish. So we want to put the odds in our favor as much as we can. We want to be with that daily momentum, that daily strength. And that isn't there whenever we have a swing high that got recently put in, okay? We want that confirmation back to the upside. So after you get that, after that happens, there's another way you could resume with having your daily biases bullish. After you see that previous swing high get taken out again, after that occurs, you can resume with having your daily biases bullish. Okay, you really don't need a new swing low to get put in, that because remember, market structure is already 100% confirmed bullish, right? So after that high gets taken out, you can confirm or you can resume with having your daily bias as bullish at that point. Okay, the only time where you would have to see every single step repeat once more is if you had a swing low taken out. So imagine with me for a second that price right here, it didn't curl up higher. Say price continued lower and it broke that swing low level right there. All right, because remember, we had our shift and then we had our swing low level put in right there, right? But then say price came lower and it broke that swing low level. At that point, again, that is a shift in market structure to the downside. If that was to occur here, you would have to see all the steps repeat once more. So you would have to see it come back up. You'd have to see it come back up, break that high, and then put in a new swing low level before your daily bias resume to bullish, okay? And if that didn't happen, say it broke that swing low level like that, and then it traded up and put in a what? It put in a swing high level. Then your daily bias would go to bearish because it's confirmed market structure to the downside. And again, I'm going to leave a few videos on market structure in the video description. That'll clear up everything you need to know on market structure, because that's basically all this is. It's knowing how to read market structure is basically the key to having that daily bias. Let me say that again. The key to getting that daily bias is having a firm understanding of market structure. That's it. That's literally it. Having a firm understanding of market structure. So we're going to go over a few more examples here. Okay, so let's see. Well, let's just stick with this because you can see it continued to grind up higher. You had a swing high put in. You would want to, again, like we just said, sit on the sidelines for a second. It came back up, took out that high. You could be bullish. And when you're bullish, you're looking for what? You're looking for previous day's highs to get ran out every single day. That's your objective. It takes it out. Takes out previous day's highs. Takes out previous day's highs. Takes out previous day's highs, and it continued grinding up. Okay, there's opportunities in each of those days. You had opportunities because remember, your daily bias was bullish on each of these days, and you had opportunities to make money in there, most likely. Okay, so what happens next? It trades up, takes out these highs, aka trades up into a premium market. After it trades up into a premium market, we put in a swing high level. Again, what are the rules? Remember, when you have a swing high like that put in, you want to sit on the sidelines and you want to wait for either two things to happen. You want to see it break back above that high, or you want to see a new swing low level put in. Those are your two scenarios there that you want to see. Okay. Or if you do currently have on a long position and you see a swing high like this close and form like that, it would be smart to play really good defense and possibly cut your position. Okay, because many times when you have a swing high like that formed, in many cases, you'll see price will want to go purge the sell side liquidity beneath that third candle and resume lower, because now the momentum is basically to the downside. After that swing high is formed, the momentum is short term to the downside. Again, even with this example that we're using on Euro USD, market structure is 100% firm bullish, but the short term momentum is to the downside. Okay. and it remains that way until you break that high or you put in a new swing low. Okay, so what happens? Price does what? It trades down into a discount, which is below 50% of that price range, trades down into a discount, and then we get a new swing low level put in. Remember the rules. Remember the rules. That's when you would begin being bullish again, because now the momentum is back to the upside. Okay, lowest low in the middle, 2 higher lows on the left, and a higher low on the right. There's your swing low. You can now, your daily bias goes back to being bullish on it. Okay, beforehand you were just sitting on the sidelines. You were letting it do what it wants to do, and you got to be okay with that. That is a huge problem with beginner traders, is they feel like they gotta be in the market trading every day. They gotta be taking a trade. No, you don't. Sometimes there's no opportunities, and you need to sit on your hands, and you need to wait. Okay, you need to be patient, and that's what you would be doing in something like this. After you had a swing high form, you would just be sitting on the sidelines waiting for your confirmation. Boom, you got your confirmation. Swing low level put in. Daily bias goes back to bullish. You're looking for previous day's highs to get ran out every single day. That's your objective. That's what you're looking for. Boom, takes it out. Boom, takes it out. Swing high put in, sit on the sidelines. Boom, takes out the high. You're back to your daily bias being bullish. Boom, takes out the high. Swing high put in, sit on the sidelines. Boom, takes out the high. You're back to daily bias being bullish, and then you had a little move up. Okay, let's look at another example, or another bearish example. All right, here's a good easy one for you to read. So right here, so we can see GBP USD right here. If you look at my cursor, pay attention to my cursor. Trading lower, trading lower, trading lower, trading lower. And then what happens right here? We broke that swing high, confirmed market structure shift to the upside, put in a swing low, and now market structure is 100% bullish, 100% bullish, 100% bullish. Remember, it remains bullish until what happens? You break a swing low. So right there, see that swing low? When price came down right there, let me just draw it on the chart so everybody can see it, because now we're going over a bearish example once more. As soon as you see a daily swing low taken out, that is a shift in structure, like right there. Okay, but it's still premature. It's still early. We need one more thing to happen. We need to see a swing high put in, right? Comes down, comes down. Now you might be looking at this, you see a swing high, but something else happened right here if you look closely that would make me stay away from it with this strategy specifically. Sure, we had a swing high put in right there, but you got to notice what was broken to the upside right there, a previous swing high level. So just like that, you had a shift right there. Just like that, you had a shift right there to the upside. Okay, so that's why you got to pay very close attention. That's why you would want to now, if you were bearish, you'd want to see it break a previous low. So it would have to break a previous, or have to break a swing low level now. So what happens? Price comes down, comes down. You had a swing low level put in, so you might have originally, since we had that broke that swing high, you might have been bullish as soon as you saw this swing low put in. But then what happens? Boom, it breaks lower. Okay, so now basically it resumes. After you break that swing low level like that, you're looking for what? You're looking for a swing high to get formed. Price trades lower, trades lower, trades lower. Don't worry about missing all this, okay? You don't need to catch everything. You just need you just need the meat of the move. You just need a few solid opportunities. Then that's all it takes, okay? So what happens? You get your swing high put in right there, and you can now be looking for selling opportunities. Or if you want to wait for that 100% confirmation, you could wait for the third candle, which looks like it probably would have saved you in this scenario, because what ended up happening, price came up, it broke that swing high level, and at that point, y'all know the deal. What do we wait for? We got to see it break a swing low and a swing high put in, which it did right here. Swing high was put in right here. So broke swing low, swing high put in, and then you did get a few opportunities after that. So it's not perfect, okay? And no strategy is perfect. But this is a really clean-cut way to go about finding that daily bias. Now I'm still gonna go over a few more examples, because I'm sure for some of you it's still a little bit cloudy and you're still a little bit maybe lost. So let's go over, trying to find a really easy example for you that would be really, really easy to read. Okay, let's do this one right here. So you can see price traded lower, and right here you got a swing high level. We're gonna go over another bearish example. So say, just pretend you were shorting this, okay? Right here, price came up, it broke that swing high. What do we need to see happen if we're selling? We need to see it break a swing low, put in a swing high. The price does what? The very next minute, it comes down, boom, huge break at that level. Really strong move below that level. That's a shift in market structure that we've already talked about several times in this video. Breaks a swing low. After it breaks that swing low, you want to see a swing high formed, okay? And what happens? Right here, highs high in the middle, two lower highs on the left and the right. Market structure is confirmed bearish at that point. Again, you want to be safe. You want to be 100% safe. You could wait for that third candle low. The sell stops beneath that low to get taken out before you start looking for sells. You can do that. But after the shift, swing high put in, your objective is to look for the sell stops beneath previous day's lows to get taken out. That happens, and then it did end up curling back up shortly after. But you had a few opportunities in there where you could have made money, or a few days where price expanded to the downside, where probably could have gave you some opportunities, some really clean opportunities in there to make money. And that's all you need, okay? I don't want you to worry about being perfect, okay? Because perfection, that kills careers. That kills trading careers. Those few opportunities in there, a few opportunities like that every month can make your trading career. That's literally all you need. That's all you need. And again, what happened? Broke that swing high, shift in structure. What am I referring to? Right there. Remember, what's a swing high? Highs high in the middle, two lower highs on the left and the right. Broke the swing high. What do we want to see next? We want to see a swing low put in. So it breaks that high, rallies up higher right there. There's your swing low. Lowest low in the middle, two higher lows on the left and the right. Remember, you go by the absolute low of the candle, not the close. The absolute low that was traded on that particular day. Right there, swing low, market structure confirmed to the upside, and now you're looking for previous day's highs to continue to get ran. Gets ran. And then you had several days of opportunity in there where you could have made money, where your daily bias was bullish. And it was bullish because you waited for the criteria that I've mentioned throughout this video, okay? Which is basically just having an understanding of market structure, knowing when market structure has that shift to the upside and it's confirmed bullish, knowing when market structure has that shift to the downside and it's confirmed bearish. That's all it is. It's market structure, right? So, and let's see what ended up happening to this right there. It came lower, had that shift to the downside. Okay. Then same deal. You want to see what? And again, for anybody that I might be moving too quick, there's that swing low level. There's that shift in structure to the downside. See that? Then you wait for what next? You wait for a swing high to put in. It got put in right there. Did break above it, so you'd have to sit on the sidelines, wait for a swing low to get taken out at that point. It does it there. Takes out that swing low. Now you want to see a swing high put in. Puts in your swing high right there. Market structure is bearish, okay? And now you go into the market looking for previous days lows to continue to get taken out until a previous high gets taken out, or a swing low gets put in, and then you'll just have to temporarily sit on the sidelines, wait for it to resume lower. Okay. And yeah, so one more time. So again, there was that shift. Once it broke that swing low, shift in structure, swing high put in. Now you're bearish. And here was where that swing low was put in. Right there. So as soon as you see that, you would want to see, remember, as soon as you see if you're bearish and you see a swing low put in, you want to temporarily sit on the sidelines. Market structure is still bearish. Market structure is still bearish because we haven't broke a previous high. We did right here a little bit later, but at that point where that swing low was formed, it was still bearish at that time overall, but you still want to wait on the sidelines. You want to see that momentum continue to the downside. You want to see it break this swing low level or put in a new swing high before you continue with having your daily bias as bearish. What ended up happening? It did break that swing high briefly, so you'd have to basically reset it one more time, or you'd have to reset it again, wait for the exact same rules again. So break the swing low, put in a new swing high, and continue with it. Now, I know a lot of you are thinking, well, it keeps resetting itself. It keeps breaking swing highs, it keeps breaking swing lows. This seems inconsistent. Again, I want to stress the importance of no strategy is perfect, okay? Everybody, or not everybody, but a lot of beginners, they want that holy grail, something that's just perfect. It's just picture perfect. And guess what? That doesn't exist. It doesn't exist. And this is, in my opinion, this is the easiest way to go about finding daily bias. The absolute easiest. Okay, stop worrying about catching every little thing. You don't need to catch every little move. Okay, you just need to catch, well, a few. Again, I've said so many times, 6% a month compounded month over month is what? That's 100% gain on your account in a year, right? It does not take much. I mean, literally a few of these opportunities, not even a week, a few of these a month, you can make a career out of it. And now I know some of you are thinking, but Mike, if I'm just trading GBP USD, I'm hardly going to get any opportunities if I come into the market with this outlook. So I do recommend trading multiple pairs. I know everybody hates on that. I know everybody says only trade one pair. And I'm not saying that's a bad thing at all. It actually can be really good. It keeps your focus and you can really learn the intimate movements of one pair just by focusing on one. But if you're doing this strategy particular, because remember, not all strategies are the same. With this strategy particular, when you're looking for daily bias like this, it's smart to have multiple pairs, a lot of different pairs, okay? And you're looking for that very specific criteria on the daily chart that I've talked about in this video. So one last time before I close it down, and again, I'm gonna leave several links in the video description. I want you to watch all the videos on market structure, okay? All those videos on market structure. I want you to watch this video several times. I want you to go into your own charts. I want you to study it on your own charts. And then I want you to watch those videos on market structure as well. And I'm telling you, by the end of it, it'll be clear. You'll see it. And yeah, it's a really simple, really easy concept. It's not going to take you long to grasp it at all. And I do firmly believe this is the absolute easiest way to get that daily bias. And it's really the only strategy you need for daily bias. Okay. So right here, here's one last example. Remember, so if we have a bullish daily bias, what do we need to see? The shift in structure. You need to see price break a swing high. Right here, highs in the middle, two lower highs on the left and the right. Brace your swing high. That's step number one. That's just step number one. What do we need next? We need a swing low to put in. Right here, lowest low in the middle, two higher lows on the left and the right. Market structure is bullish now. That's it. It's that simple. Market structure is bullish. You now have a daily bias is bullish. You come into the market with your daily bias, with your bias being bullish. As soon as you see that, you're operating on the daily market structure, or you're trading with the daily market structure. You're trading with the daily flow. And just by doing that alone, I'm telling you, just by doing this alone, by trading with the daily market structure, you put a lot in your favor, okay? Because most people don't do this. And most people don't even have the patience to trade like this, or to be this particular, to be this quality with their setups. Okay, most people, most beginners, they're too focused on their little 1 minute charts. I'm not saying you can't make money on a 1 minute chart, but put some emphasis on your larger time frames and trading with that larger time frame flow. And you, just by doing that alone, I'm telling you, you put the odds of success in your hands, or it increases dramatically. Let's just say that. Okay, so again, you're looking for previous day's highs to get ran every single day at this point. Your bias remains bullish until what? Until a swing low gets taken out, which is right here. That's where it would switch. Or if you get a swing high that's put in, you would want to temporarily sit on your hands and then wait for that high to get broken or a new swing low put in, which that doesn't happen for some time here. You can see price does what? It attacks that high right there. It attacks those buy stops. Attacks those buy stops. That's 2 days right there of opportunities where you could have made money. Okay. And what happens right here? Boom, a huge move up higher. Another day of opportunity where your daily bias was bullish. Right here, takes the high day again. Daily bias was bullish. Another day to make, or another day of opportunity. And then right here, same thing. This is where it opened. It took out those highs. That's another day of opportunity. Took out those highs again. So, I mean, look at this, like day after day after day. This is where you run it up. Okay. I've said it before. There's times where you have drawdowns times where you have losing streaks, but there's also times where you run it up. There's also times where you run up that capital. And when you get runs like this, where it's just consistently grinding up, giving you day after day after day, you could really run up capital on stuff like this, okay? And there was where your swing high got formed, right there. So that's where you would sit on the sidelines. As soon as that closed like that, you would want to hold off. And then what ended up happening, as soon as that swing high was formed, you did have that shift in structure shortly after, which happens sometimes, or it does happen many times. And that's a really good way to play good defense. Okay, and remember, even when this swing high was formed like this, the market structure at the time was still bullish, but you would want to let that momentum continue to the upside before you would get back into it. Okay, still bullish, but you'd want to see it come back up, break those highs, or put in a new swing low level. You basically just want to see some upwards momentum to the upside again, because then what ended up happening, you had downward momentum, and it came down, then boom, you had a shift in structure, and then the rest is history. So again, I'm going to leave a few links in the video description. I want you to watch that video on market structure that I'm going to leave in the video description. The blog post, I want you to read that blog post. And I'll also leave a link to my free Discord chat room. Okay? So feel free to join that as well. If you enjoyed the video, leave a like, subscribe to the channel, and I will catch you later.